Hey everyone, welcome back to Corporate Decoder. Today we're diving into Asure Software's latest filing, and let me tell you, it involves some interesting board decisions and a potential extension that might make you wonder if they're trying to hold on to something a little too tightly. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about all things corporate filings. So what's the deal? Asure Software held their annual meeting and voted on some key items, including extending a certain agreement that could impact the future of the company. We'll break down what happened, what it means, and whether it's good news for investors. First up, let's talk about the main event, the fourth amended and restated rights agreement. The company's board approved this agreement back in April, but it needed the thumbs up from the stockholders. On June 2nd, the stockholders gave their approval and this agreement will become effective in late October. So what's in this agreement? It's mostly the same as the previous version from late 2022 with a couple of key changes. The first is that it pushes the final expiration date out to late 2028. The second is that the previous rights agent got merged into a different company, Equiniti Trust Company LLC, which will now handle the responsibilities. Why is this important? Well, this agreement is essentially a poison pill. A poison pill is a tactic companies use to prevent a hostile takeover. If someone tries to buy a large chunk of the company's stock, this agreement allows other shareholders to purchase additional shares at a discount, which makes the takeover attempt much more expensive and difficult. Extending this agreement suggests that Asure Software wants to make sure they have this defense in place for the next few years. Now let's move on to the other items that were voted on at the annual meeting. Besides approving the rights agreement, stockholders also elected directors, ratified the appointment of their accounting firm, and voted on some compensation-related matters. Let's dive into how people voted first. The stockholders elected the following individuals as directors of the company. For Benjamin Allen, we see about 21 million votes for, against roughly 77,000 withhold votes and 3.4 million broker non-votes. The stockholders also ratified the appointment of CBAZ CPAs PC as their independent registered public accounting firm for the year ending late 2025. Over 24.5 million votes cast for the proposal. Then there's the approval of the Asure Software Agreement, which we already covered. The votes ended with 19.8 million for and 1.3 million against. Stockholders also approved an amendment to the Asure Software Incentive Plan to increase the number of shares of common stock authorized for issuance by 2,250,000 shares. A vote of 14.5 million for and 6.3 million against. On an advisory basis, the stockholders approved the compensation of the company's named executive officers with 17.9 million votes for and 2.8 against. Finally, on an advisory basis, the stockholders approved the frequency of 3 years for future advisory votes of the compensation of the company's named executive officers, with 11.3 million votes for 3 years. So what does all this mean for Asure Software, kids? On one hand, extending the poison pill could be seen as a way to protect the company from unwanted attention and ensure stability. It gives the board more control over the company's future. On the other hand, it could also be interpreted as a sign that the board is more interested in preserving their own positions than in maximizing shareholder value. Some investors might see it as a deterrent to potential acquisitions that could be beneficial. The approval of the incentive plan amendment is a mixed bag. It could help attract and retain talent by offering them more stock options, but it also dilutes the value of existing shares. Ultimately, whether these moves are positive or negative depends on your perspective and your investment strategy. If you're a long-term investor who believes in the company's management team, you might see this as a prudent step to protect the company's interests. If you're looking for a quick return or think the company is undervalued, you might be disappointed. Alright, that's our breakdown of Asure Software's latest filing. What's your take on these decisions and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.